Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to episode number 1453. Today we've got part one of James Altucher coming back on the show. It's always great to have him. He's just a good thinker and has a lot of interesting insights to things. And he is a New Yorker, and he will be reporting on the COVID situation in New York City. So I think you're really going to get a lot out of this, insights into a variety of things. Again, we are a multi-dimensional show, just like income property is a multi-dimensional asset class. And that's why it's so powerful and so lucrative. And so before we get to James Altucher, let me share with you a couple of things that have been interesting to me today. Number one, there is an undeniable, unequivocal, is that the right way to say that? Anyway, whatever. It's a sure thing. How's that? That when it comes to pandemics, density matters. When it comes to any infectious disease issue, it's I guess it's not all about, but it's largely about density. And I was again on George Gammon's show yesterday on his YouTube channel. And by the way, speaking of other people, happy to announce that we have Jim Rogers joining us back again. He's been on the show 3 times before, but it's been many years. I emailed him the other day and I said, hey, Jim, he is the most approachable zillionaire I know. such a Southern gentleman. Jim Rogers, the famous hedge fund manager and author of so many great books, including one of my favorites entitled Adventure Capitalist. Also Investment Biker. A lot of you may know him from that book or many other books. Anyway, he's coming back on the show. So I emailed him. I said, hey, Jim, it's been a long time. We got to get you back on the show. And he writes back right away. Such a gentleman. He writes back, Jason, when was the last time I was on your show? And I wrote him back and I said, 2013. So it's been far too long. 7 years. Wow. Okay, back to this infectious disease issue and density. So I've talked all about 3 types of real estate markets that we all need to be aware of, that we need to know how to invest for. What are the 3? You've heard it too many times: linear, cyclical, and hybrid markets. But we need to add some layers to this onion, if you will. And a couple of the layers we need to add are high density and low density. Okay? So not just linear, cyclical, hybrid, but now we have high density and low density. And then let's segment simply by one kind of price category. I'll make it really simple. Of course, you could further segment this until the cows come home, as the saying goes. You could segment it into many, many price categories. But let's just do one segmentation, lest we get too complicated. And that will be conforming loan or jumbo loan. In other words, when the typical buyer buys one of these properties in one of these markets, they've got jumbo loan type of properties and conforming loan type of properties, the lower price properties, in all markets, in high density and low density markets, and in linear, cyclical, and hybrid markets. So now we went from 3 categories to 7 categories: linear, cyclical, hybrid, high density, low density, jumbo loan or conforming loan needed to acquire the property. Okay, so we got seven parameters now. Let's look at density for a moment. Okay, as I've told you before, 84% of the United States lives in what is considered to be an urban area. That's the 84% number. The average population density of the US is only, and this is pretty low density, 87 people per square mile. The average population density in the US of metropolitan areas is 283 people per square mile. So we go 87 people, 283 people per square mile in either of those. New York City, super dense, obviously, 27,012 people per square mile. So my thesis is that as these lockdowns lift, people are really going to be moving. They're going to be thinking about moving. They've been thinking about moving. They've been thinking about, why am I cooped up in this 800 square foot place in New York City that's costing me $4,200 a month in rent, or it'd be $1 million, $1.5 million to buy it, probably. I don't know. It varies, obviously. But definitely a jumbo loan, by the way. Why am I cooped up here when I could be living a better life in a suburban place for a fraction of the cost, and I can do all the same work I'm doing now? Because I am now, and the world has come to finally, although it's long overdue, accept that telecommunication is the way to go. And I can't socially distance in this place in New York City. And New York City is just a proxy for any city, any densely populated area. But the question is, how does this density look around the world? Now, what's interesting about it around the world, not in the US, we just talked about the US numbers, but let's look around the world now. So I am looking at a graph, I've been doing some research on this, of world urban population. And there may be some differences as to what is considered urban in the US versus urban around the world. I don't know, frankly, but I'm going with what they're telling me they consider urban versus rural. Now, remember, the concept of suburban, which is the in-between urban and rural, right? It's not urban, it's suburban, like almost urban, but not quite. So suburban is a uniquely American idea. Suburbs around the world just aren't a big deal, okay? They do have them, but not like in the US. The US is a real, suburban place, okay? If you listen to the song by the most talented band that has ever walked the face of the earth, Rush, there's a song called Subdivisions, okay, which talks about this, and it's all about suburbia. And it's not positive, by the way. But anyway, it's a great song and points out some interesting things about suburban living. And this idea of suburbia is really an American thing. It does exist around the world, but not like it is in the US. In the US, it is the thing. Around the world, it's a maybe once in a while thing. So around the world, you stratify mostly into either you are in a rural area or an urban area. So in 2019, population density in the world, okay, the entire world, just averaging it out, is 134 people per square mile versus 87 people per square mile in the US. So it's about double, right? It's almost double, okay, what it is in the US, calculated on this huge, huge land area. And of course, you've got to estimate what the land area is. So the urban population around the world, remember, the US is 84% is urban. Around the world, it's 55.7%. So around the world, you have a smaller urban population as a percentage of the whole population. Because, hey, think about it. A lot of people around the world, certainly still in China, even though they've had this massive urbanization push for a couple of decades now, but in China still, you have a giant population that lives in a rural environment. Certainly in a continent like Africa, my gosh, huge rural population. So a lot of the world is rural. versus urban, okay? 55% versus 45%. Only 45% is rural and 55% is urban around the world. Just thought you might like to know that because there is no question whatsoever that a driving huge factor in this whole PTSD that will linger, that will stick with society for many years, maybe decades to come, is borne by urban living. And if you look at the death rates from coronavirus in the United States as of May 4th, that's today, okay, per state, okay, this is the death rate per 100,000 people, okay? Now, the problem is this is per state. So, of course, it depends, right? Because it depends how much of the state is urban, city living, and how much of the state is not urban. But just looking by state, you can pretty much understand what's going on. New York State leading the country with 126 deaths per 100,000 people for COVID-19. New Jersey, also high density, 89 deaths per 100,000 people. Connecticut, 68. Massachusetts, 58. Remember, they got Boston, okay? Louisiana, 42. Michigan, 41. Washington, D.C., 36. Remember, D.C. isn't that much of a high-rise place. Even though it is dense, it's not the super high-rise. Rhode Island, 30. And a lot of this relates to also, treatment, state response, lockdown, blah, 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 you get it, right? But you can just sort of, when you look at the big picture, you can see that urbanization really affects this. And I say this is going to linger. This PTSD, this post-traumatic stress disorder from what has happened is going to linger for decades to come. And you, dear investor, can profit by helping people change their lives for the better, by helping them move to suburban areas and renting from you. Yes, that's how you profit from that, okay? And we're going to talk this week, hopefully we'll get time to talk about the 90% economy. And what do I mean by that? Well, where are we going as we recover, as we come out of this? How much of the economy will come back? One set of experts, really a whole group of economists, predicts 90%. They dubbed it the 90% economy. I say they're wrong. I say they're way too optimistic. There's no way the economy is coming back 90% after this. It's going to be a slog, okay? Don't accuse me of being too optimistic, because I'm not, okay? The only thing is that I think that the forces of the de-urbanization and the mass migration to suburbia out of urban areas, and 5 other factors that I've identified beyond this, will outweigh the damage to the economy as we restart, as we reboot the economy. I don't think the economy is going to come back at 90%. I think it's going to be worse. We are going to come back into a smaller economy, an economy where people, and I just look at my own life, okay? Listen, if you've been listening to my show for the past 16 years, okay, or even the last 5, or even the last 3, I'm like Mr. Traveler. I travel a lot. And you know what? I've really reevaluated my life. Coming out of this, even when everything's okay, even when there's a vaccine, I just don't want to do it. I'm just not that interested in getting on a plane. Now you could say, okay, well, Jason, you've been to 87 countries. And 87 is the exact number, by the way. You've been to 87 countries, and you've been to those many, many times. You've done your traveling. You don't really have the urge. You don't have the wanderlust that I do. I want to go see the world. Okay, fine. I understand. But I just think there's going to be a lot less travel. There's going to be a lot less going out to dinner. There's going to be a lot smaller restaurant industry. There's going to be a smaller spa industry. There are going to be so many industries that just shrink and shrivel. Retail, obviously, office space, the commercial market, the commercial world. We got to talk about who's not paying their rent in the commercial real estate world and the blacklist for that. I know I said we'd talk about that before and we didn't get time to. We'll get into that hopefully this week, because let me tell you something, folks. Aren't you glad you did not invest in commercial real estate? You've been following my plan. you've been all about the three biggest, most important factors in the real estate market. What are they? They're not location, location, location. Because I taught you back starting in 2012 that geography is less meaningful than it's ever been in human history. Geography is less meaningful than it's ever been in human history. Oh, it still matters, but less than ever before. Do you know what the three primary rules are of real estate now? They're not location, location, location. They are, according to Hartman, the Hartman rules, the three Hartman rules of real estate. They are housing, housing, and housing. Okay? Housing is where it's at. And hopefully that's where you've been at if you've been listening to my show and you didn't get suckered in to investing in some of this crazy commercial real estate that is now just collapsing, like a collapse that we haven't even seen the beginning of yet. It's going to get a lot worse. So it's good news and bad news at the same time. It's the tale of, it's the tale of three cities, okay, to use a well-worn cliche, to modify a well-worn cliche. And we'll keep investigating it for you. Lots more to come. Okay, without further ado, let's get to James Altucher. But if you need us, jasonhartman.com or call us at 1-800-HARTMAN. And here we go with James Altucher. Hey, it's my pleasure to welcome a returning guest back to the show, and that is James Altucher. When he was on a couple of years ago, we had a great conversation about his book at the time, a concept I very much support, which is Choose Yourself. And since then, he's developed a huge podcast following, The Altucher Show. He's a former hedge fund manager, knows a lot about the economy, and he's been looking into the epidemiology of the COVID-19 situation. He also lives in New York City. He's the author of a bunch of books. I won't even go through all the titles, but there's so many. He's prolific. Anyway, it's great to have James Altucher back on the show. James, how you doing?
Jason, thanks so much. Thanks for having me back on, and I super appreciate it. It's too bad it's such unfortunate circumstances that bring us back together on the show, but it is what it is.
Yeah, it is what it is. That's for sure. But there's a lot of opportunities right now too. And whenever there's a crisis, like the Chinese say, crisis and opportunity are the same thing. Their thing is literally translated, crisis is opportunity riding the dangerous wind. It's kind of interesting.
Oh, I didn't know that.
Yeah.
Is that like the saying, ancient curse, may you live in interesting times? Because
that's
similar
a little
type
different,
of concept.
But and they used to say that a lot during the Great Recession for sure. And so these are interesting times. Being in New York City, man, you're just on the forefront of it. So tell us kind of the big picture of what's going on, what you're thinking, what you're interviewing a lot of people, just what's the zeitgeist in the James Altucher world right now?
Yeah, and it's interesting you bring up New York City, in that between New York City and New Jersey, those two areas alone are more cases and sadly deaths than the other 48 states combined. Mm-hmm. So my view when I hear the news and when I walk out and see what's happening on the street, I imagine it's probably very different from somebody from other parts of the country where maybe the shutdown is not as restrictive, or maybe there's just not as many cases or not as many deaths. Like, you take Georgia, for instance, right next to Florida, which is reopening a big portion of their economy today. Mm-hmm. And they've had 800 deaths out of a population of 10 million. Georgia itself has an economy in the tens of billions. So, it's a different perspective. Here, I just feel this atmosphere of anxiety and fear and stress, and everybody's locked down. And there was all these panicky headlines weeks ago. Oh, the hospitals are about to get overrun. So Trump sent the USS Comfort. The Javits Center got turned into a hospital. Right. I myself visited the 10 hospitals on Central Park just to see what was going on. They were empty. All of these places were empty. They never did overwhelm the hospital system.
That's great. So they flattened the curve in time that we didn't overwhelm the hospitals. And interestingly, you say that, James, because being in New York, certainly about the conspiracy theories that are starting to float like crazy. And, one is where they're getting people to crowdsource video of hospitals in their neighborhoods, right? And you see like these, barricades set up for people to get in line and nobody's there. Now, I don't know how real or fake this stuff is. I just know it's interesting. Thoughts on that?
Yeah, I mean, before the peak, I went out to do a little bit of that crowdsourcing myself just to see what was going on.
Yep.
There was nobody anywhere. Yep. And I spoke to people who were coming in and out of the hospital. I spoke to doctors. I spoke to priests who were coming in and out. And like, thank God, I'm not even saying like, see, you were wrong. It's nothing. Like, okay, they took a worst case scenario and they wanted to be cautious and take every precaution.
And that's good. That's good.
But I do think, though, this speaks to the larger issue of we made, and I say we, the government and the population made huge multi-trillion-dollar decisions off of mathematical models that not once were correct. Mm-hmm. They weren't even close to correct.
Right.
Like back in January, early February, there were newspaper articles saying around the world, 140 million people might die. That was the first article I ever saw about this. Mm-hmm. And then, I had a report out of either Imperial or Harvard or both that said there would be millions of deaths in the U.S. And, up to 10 million deaths in the U.S. was the first number I heard. And then it kept coming down. And every single model was wrong. March 25th, the IHME came out with a model that said there would be 60,000 hospitalizations in New York City alone by April 1st, just 6 days later. Right. Well, 6 days later, there were 12,000 hospitalizations. They were 80% off in a model they had made just 6 days earlier. And these were all the scientists we were relying on to make multi-trillion-dollar decisions about shutting down people's livelihoods and careers and all the deaths and stress and collateral fatalities that ended up resulting. If you're in stage 3 liver cancer and you wanted to see if you had stage 4, that was considered an elective procedure, so you couldn't do it. Mm-hmm. So you still can't do it. So this is creating a problem for the entire system. Yeah. And everyone will say, "Oh, are you choosing the stock market over your grandma's life?"
Right.
No, that's not it at all. Like, people are suffering. Like, there's calls to the Bronx for child abuse hotlines are 6 times higher. Yep. Even in Indiana,
suicide hotlines are 800% higher. Calls to suicide hotlines.
It's insane. So I really just, who knows what the right decision was, but everybody was scared. But I wish the media hadn't fanned the flames of that hysteria, because hysteria now is turning into history, and hopefully we climb out of this. But yeah, so that's a long answer. But also in terms of the economy, I think we're going from a period of great uncertainty to a little bit more certainty, which is that the economy will reopen. The stimulus packages now too have been passed, plus the Federal Reserve stimulus, and the virus seems to have peaked in the U.S. And maybe there'll be a second wave, maybe not. That's part of the unknowns. But we know some things now for certain that we didn't know even like 3 or 4 weeks ago. So that's a good thing. But now going into this new abnormal, I'll call it, there's a lot of uncertainty too, which is what industries will collapse, because there's going to be a few. And, we don't know about the second wave of the virus. But now that we have a lot of data about the virus, hopefully we can say, well, okay, we don't have to shut down the entire economy this time. And we'll see. But there's definitely been a lot of interesting data about the economy.
Mm-hmm. Yeah, no question about it. Going forward, first off, what type of recovery do you think it'll be? And before you answer, I'll tell you what I think. Okay. So, we've all heard, is it going to be a V-shaped recovery? That's the hopeful picture. Is it going to be a U with a big ugly trough? Is it going to be an L-shaped recovery? I think it's going to be kind of like a modified square root sign, meaning that the square root sign usually, it goes down, then it goes up higher. I think this one's going to be down. It's going to be down in the V and then up, but lower than the start. I think this is a lasting issue. It's going to have a huge hangover on the economy. And I think the economy is going to shrink. I think there's going to be a form of PTSD, I hate to say, where travel isn't going to resume. It's going to be a slow slog to get back to the new normal. I mean, there'll certainly be a lot of opportunities. I'm not being like negative. I just think there's always a lot of repositioning, right? When something like this happens. Your thoughts?
I mean, look, this is a bigger disaster than, and I'm not even talking about the pandemic. The economic shutdown is a bigger disaster than what happened in the economy after 9/11, what happened in the economy after 2008, 2009, which was a pretty big disaster, by the way. I mean,
no question.
The financial system collapsed and they had to bail it out. There was no cash left and they had to put cash into the system. And 9/11, the country feared it was under attack, and certainly things were affected permanently, like travel and airports and our relationships with the Middle East and so on. And banking kind of changed forever after 2008 and 2009. I mean, it was just starting to come back.
If you walk into a bank now with a couple $1,000,000, instead of saying, hey, we're glad to have you, and by the way, here's your free toaster, it's like, oh, we're suspicious. You might be a terrorist or a money launderer. It's just totally, the Patriot Act is the know your customers. It's just changed everything. Yeah. It's like you have a scarlet letter on,
Yeah, and a lot of things are going to change now, and I think some of them we could probably guess about, and some of them we can't. But, it's funny just debating the different shapes. I think I'm more in your camp about how I see more of a W than a V.
Right.
So, we go up a little, which is what's already happened. We're kind of like at the peak of the W. And then we're going to have to go down again because as long as you keep seeing insanity happen, those are all canaries in the coal mine. So like what happened with the oil futures contracts 2 days ago going negative, that's never happened before.
Yep.
That's a little bit of insanity. Like I even see experts being quoted in newspaper articles talking about, the physical delivery of oil. Nobody wants to take your oil. These were cash settled contracts. There was no oil involved. It was just a big, insane thing that happened. But as long as there's insanity happening, there's no way that we have enough certainty in the market to just go straight up from here, no matter what the stimulus does. Second, the stimulus is hitting, but there's nothing to hit. The economy now is like a patient on life support.
Right.
This is a Band-Aid at best, and you have to have a living patient that's walking around before the stimulus can work. So we don't quite know for sure. We know what's going to happen, that the economy is going to wake up, but we don't know when and in how many phases.
And by the way, if I just keep your thought there, please don't forget. But what you're kind of referring to is, and we've been talking a lot about this rare malady of supply-demand shock, which sort of was pronounced in the 70s. And so we've seen demand destruction, obviously, but I think we're going to see supply destruction too, because, for example, oil is a great example, right? Look, this is a prediction. It may be totally wrong, of course, but now we have demand destruction, and there's like gluts of oil, and oil's cheap, and they're having tankers store oil that they're not moving the oil, they're just storing the oil, right? It's a totally weird situation. But now these oil companies go out of business, and when things do recover, there's a lot less supply. So same with the airlines. Like I did a Google Flights search today, and I've been looking at flights. Just interesting. I don't want to go anywhere. I'm just doing it as a study.
Sure.
And to go, I live in Palm Beach, Florida. So to go from Miami to LAX, which is like an easy route, take a direct flight, it's really expensive. In fact, looking at the chart on Google Flights of the last 60, 75 days, it's at the highest price it's been. And if you looked just 3 weeks ago for that flight, it was dirt cheap. Okay, 4 or 5 weeks ago, cheap, right? Because you had lots of supply and no demand. And now that the airlines have grounded a lot of their flights and canceled their routes, you have, a small amount of demand, but a lot less supply too. So it sounded like you were sort of alluding to that, and I just wanted to bring that out as a discussion point.
Yeah, I mean, with oil,
and not oil in particular, just generally widgets, but oil's an example. Go ahead. Yeah.
Yeah, I mean, I think because this is such a weird thing, this lack of demand is not based on where the economy was heading a few months ago. It's this forced lack of demand because we're all being told to stay at home, which I'm not questioning one way or the other. That's not what this is about. But so I own part of a private oil company, and we just stopped producing the oil. Like we realized there's not going to be any demand, and there was no reason to pump more oil out,
Right.
and we'll start pumping again when there's demand. I think that's what most oil companies are going to be doing. So I don't know if the oil companies necessarily are going to go out of business. Some places will, like, the average small business, like a restaurant, only had 16 days of cash in the bank. They might not have gotten their small business loans. Hardly any small businesses actually got the small business loans.
It's so unfair.
A lot of storefront businesses are going to go out of business. A lot of small mom and pop businesses, sadly, are going to go out of business. I don't know how you really avoid that. They're trying to. I mean, the premise of the $2.2 trillion stimulus package and then an additional $450 billion as of yesterday, the premise is that $2.5 trillion of money is not going to be spent this quarter. So that's what they've calculated.
Give us that number again.
Well, like every quarter,
yeah.
The GDP of a year is about $20 trillion. And every quarter, that's $5 trillion. Yeah. And they kind of think there's about 40 to 50%. Yeah. Okay. So then this is the government. This is what I'm getting. Sure. This was on my podcast with I had on my podcast the other day, the deputy chairman of the St. Louis Federal Reserve. So he was telling me his reasoning is that between 2 and 3 trillion would be withdrawn from the economy because we're all not spending money while in our houses. Yep. And so they created $2 to $3 trillion of stimulus. And so it's supposedly going to replace what we lost in terms of money. But again, all of that stimulus is going to end up just sitting in a bank. And so the velocity of money needs an economy to be flourishing. Right. Otherwise, people won't spend. They just keep the money in the bank. And the money doesn't have the intended effect on the economy. So to your point, you'd have to put in 5 or 6 trillion. If the economy is truly going to slow down, you'd have to put in trillions more to make up the same amount that last year's 2 trillion was. So the point is that if we do have this PTSD, then you're right. We're going to see much more of a slowdown in the data in Q3 and Q4 than we expected. It won't be the V-shaped surge that some economists and government officials are predicting. Now, we don't really know, though. I mean, the one theory is, like you said, we're going to have this PTSD. We're going to realize we don't need to go out as much. We're going to enjoy staying at home. Yeah. On the other hand, it's sort of like we're drug addicts and we were addicted to the economy and spending money. Yep. And now we're in drug rehab. Yeah. And typically in drug rehab,
that's a good way to put it. Yeah.
Typically in drug rehab, we stop using drugs. But then when we get out of rehab, we start hanging out with our old friends and going to our old hangouts and we start using again.
We relapse,
Right. So theoretically we could relapse also. I think this is one of the uncertain things. I could say now, I'm never getting on a plane again, or I'm never going to a restaurant again. But when I can and my wife wants to go to a restaurant, I'll do it. I'm not, and I actually own a bar, so I hope people return to bars. But we'll see. A dirty, disgusting petri dish of disease like a bar, like the bar I own at least. And but I think it's an unknown, and we'll see. But I'm more inclined to think just the mechanics of it is more like a W. Although I do think the stimulus will be enough. Not necessarily the short-term stimulus that Congress is passing, although that will help, but the Federal Reserve stimulus, which is cutting the interest rates, buying mortgage-backed securities, buying corporate debt, that's almost going to be forced to lift the economy. But people don't realize federal stimulus, even this extreme, doesn't kick in for a good 6 to 12 months at least. Yeah. So we've got a while before that kicks in. So we'll see.
You made a great metaphor there of the patient that's on life support, right? And so, you can pump money, but pumping money, it doesn't solve every problem. It's the usual tool that the Federal Reserve goes to. It's the sort of their go-to thing, In fact, it's just funny. 9/11, a Great Recession now, whenever you have like a G7 meeting, the whole thing is like, how much money do we pump into the system, right? That's always the solution. But in this case, it doesn't it's not the panacea it is sometimes, right?
Right. Like in 2000, basically we're following the playbook of 2009, 2008, 2009. So the Federal Reserve over the past 2-3 decades has gotten a lot more sophisticated about the ways they can help the economy. So back in the 90s, Alan Greenspan would just cut rates and that would do it. Yeah. After 9/11, there was some stimulus checks and it was mostly just cutting rates. But after 2008, 2009, it wasn't just cutting rates. It was also encouraging banks to have excess reserves by raising the interest rates that the Fed would pay banks on those excess reserves. They started buying mortgage-backed securities and going out a little bit further than just treasury bills. And they're doing more of that now. They're doing the same, but more now. And again, you're right. If nobody's buying goods, it does nothing to help the economy. It does zero. Yeah. So the economy has to move first. And is this stimulus enough? Are the right people getting it? Was this the right macroeconomic theory? I don't know. This is a giant experiment. $2 trillion just like to replace spending. I don't know if that – we'll see if it works. I mean, it's probably better than nothing. And then we have massive deflation right now on some things, but like you pointed out, depending on how efficient the industry is, there might be inflation. And then, of course, structurally, does all this increase in dollars result in inflation? It's unclear. Right now, the rest of the world buys our dollars, and that's a deflationary pressure. But I do think specifically you're going to see things like commercial real estate has to have a mini financial crisis after this. WeWork's going to go out of business. Restaurants.
You're saying mini? I think that's going to be a maxi crisis. Yeah,
right. I guess I agree. I'm just afraid to say the word.
You're being optimistic. Yeah.
It's like I don't want to say to my wife, why didn't you get the maxi pads instead of the mini? Like, it's like, don't do that. Okay. Yeah, I mean, what's going to happen when WeWork goes out of business, which is 100% chance, right? Like the average, they're the biggest real estate renter for commercial real estate in New York City and other cities. I know. So if you have a building and suddenly 8 floors, or your renter just disappears, and you got to clean it out, find another renter.
And WeWork was already a scam, before this. So
SoftBank used this as an excuse to pull the plug.
And that was a smart decision. So poor Adam Newman, he's only going to be a millionaire, not a billionaire.
I think he pulled out like $700 million. So he'll survive, but I don't know if he could feed his kids in a few years, but we'll see. Right. But what are all these commercial real estate companies going to do? They live on borrowed money and now borrowed time, and they're not going to survive. The entire industry is going to change. Airlines, despite a bailout, are probably going to go out of business. Cruise lines. I don't know if Las Vegas is going to be able to stay in business. Are you going to Las Vegas anytime soon after this? Like, would you even plan that?
That's the PTSD kind of concept that I'm talking about. Like, I mean, this may sound weird, and I don't mean to minimize the quarantines and the depressive effect it's having on people's psychology. But personally, for a guy who jumped on a plane 2-3 times a month, I love it. I just love not owning an airline ticket, having no plans. I'm enjoying this time of just being a homebody. I actually really quite like it. I know that's not true of everybody. You know what?
Well, they go out to the beach?
Yeah, I'm in Palm Beach, Florida. So they just reopened the beaches, and I have not been yet. I don't know why they closed them in the first place. I can see closing them down for spring break parties and stuff, sure, but just a regular beach that's not part of the scene, that seems sort of silly to me that they closed them.
Yeah. And look, there's a lot of evidence that vitamin D and the sunshine helps. The UV, helps against the virus. Yeah. And kids need to go outside and run around and play.
No question.
Central Park here is I don't want to say it's crowded, but there's a lot of people there even right this moment, and there's appropriate social distancing and masks and so on.
As long as people are doing the thing right. But what I meant to say by that is that as part of the PTSD concept, I think people will get used to and maybe be okay with a little bit of a simpler life. I admit that right after this is over, it's kind of like if you live in a place with inclement weather a lot, the first sunny day, everybody's out, right? And, like your wife wants to go to a restaurant. Sure, I get it. But after a while, I think the new normal will be like a lessening of a demand for that. Fewer trips, fewer cruises, fewer restaurants, fewer bar, I mean, people will still do it. I just don't think it'll be as often.
Yeah, that could be like, look at after 2009. I bet you if we did a Google trend search on minimalism, and then you had the whole Marie Kondo thing and so on. I bet you minimalism really became in vogue after 2009. Kind of the not that it was the death of consumerism, but it was a sickness. Yeah. And probably a similar thing will happen here. And I think what I'm seeing when I talk to people, and who knows if it sticks, is that the whole kind of lifestyle influencer you see on Instagram and TikTok, I feel like that's over, and people now are looking for more mental health solutions, stress solutions, spiritual solutions. Yeah. And how does that translate into the economy? Look, there's definitely going to be some cheap stocks out there like we're talking right now over the internet, and bandwidth has increased so much that companies like Netflix and YouTube are saying we're going to decrease the bandwidth quality or the bandwidth needs of our videos for a short term because there's so much demand now.
Right. They did that in Italy when the quarantine first happened there. Yeah.
Yeah, and so chips that help for bandwidth or chips that help for gaming or virtual reality, those are going to skyrocket. Of course, Amazon's always going to do well. Google's always going to do well. Tech companies will do well. Oil companies will bounce back because there will be demand again for, oil fuels so much of the world economy. It's, even going back to a $30 oil price or $40 oil price, which will happen within a year or two easily, particularly with this stimulus. Oil, you have companies like Shell, Royal Dutch Shell, which have gone from 66 to 32 during this crisis, pays a 10% dividend. Those companies, and they're not cutting their dividend anytime soon.
Right.
Those companies are going to exist.
This will be continued on the next episode. Thank you for listening and happy investing. Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.